Hello, my name is Eileen Zoe, and I'm a manager with the International Public Sector Accounting Standards Board, the IPSASB. With me is João Carlos Fonseca, principal at the IPSASB. Welcome to this webcast, Leases, an Introduction to Exposure Draft 75. This webcast will provide an introduction to the key features of ED 75. You may also find helpful the at-a-glance summary of ED 75, which is available on the IPSASB's website, www.ipsasb.org. Our webcast today will cover 7 aspects related to ED 75. We'll start with a brief history of the Leases project, followed by main features of Exposure Draft 75 leases, the scope, definition of a lease, lessee accounting, lessor accounting, and sale and leaseback transactions. At the end of the webcast, we will also cover the next steps for this project. ED 75 was issued after the review of responses to ED 64 leases. João, can you provide a brief history and explain why ED 75 was issued?
Thanks, Eileen. In January 2018, the IPSASB issued ED 64, proposing a single right-of-use model for lease accounting in the public sector. This would mean that lessors would apply a consistent lease accounting model with a model for lessees. When reviewing the responses to ED 64, the IPSASB noted that the vast majority of respondents agreed with a right-of-use model for lessee accounting. However, respondents were almost equally divided over whether a departure from IFRS 16 lessor accounting was justified, with a small majority supporting departure. On the other hand, respondents that did not agree with ED 64 proposals for lessor accounting did not have a unified view on the approach that should be adopted for lessor accounting and proposed a number of alternatives. The lack of consensus among respondents on the economics of and accounting for leases by lessors highlighted significant differences across jurisdictions. Additionally, respondents were of the view that the IPSASB needed to address public sector-specific issues related to leases. For example, concessionary leases, access rights, and other types of arrangements in the public sector. However, respondents provided diverse views on how to address these public sector-specific issues. After careful consideration of ED 64 feedback, the IPSASB identified 3 options to progress the project. First one, retain IPSAS 13. The second one, develop a standard aligned with IFRS 16. And the third one, continue with a standard based on ED 64. The IPSASB decided that the public interest would be best served by proceeding with an IFRS-aligned standard because it would address the key problem of off-balance sheet leasing opportunities permitted by IPSAS 13 and be less costly to adopt. Feedback to ED 64 made it clear that resolving the problems identified with the proposed lessor accounting model was unlikely to be achievable within a reasonable time frame, and guidance on public sector-specific issues, such as concessionary leases, would be better developed once the revised leasing model was agreed. Let's look now at the main features of ED 75. Regarding lessee accounting, ED 75 proposes the right-of-use model aligned with IFRS 16. Regarding lessor accounting, and as it explained earlier, the IPSASB decided to propose to substantially carry forward the risks and rewards model that exists in IPSAS 13. ED 75 proposes specific changes to the model for consistency with the lessee accounting model in the areas of lease modifications and subleases. As explained later in more detail, ED 75 also proposes enhanced disclosures to better evaluate the amount, timing, and uncertainty of cash flows arising from a lessor's leasing activities.
Thanks, João. Let's look now at the key parts of Exposure Draft 75. João, can you explain the scope of the ED?
Thanks, Eileen. Exposure Draft 75 scopes out leases to explore for or use minerals, oil, natural gas, and similar non-regenerative resources, leases of biological assets, service concession arrangements, license of intellectual property granted by a lessor, and rights held by a lessee under licensing agreements such as motion picture films, video recordings, plays, manuscripts, patents, and copyrights. These are within the scope of other IPSAS. However, rights held by a lessee under licensing agreements identified earlier can be within the scope of Exposure Draft 75 if a lessee elects to apply it.
Thanks, Joao. Can you take us through the definition of a lease and the related definitions of a contract and the lease term?
Thanks, Eileen. A lease is defined as follows. A lease is a contract or part of a contract that conveys the right to use an asset, the underlying asset, for a period of time in exchange for consideration. Definition relies on the other two definitions that Eileen referred to. A contract is defined as follows. A contract is an agreement between two or more parties that creates enforceable rights and obligations. The right to use an asset encompasses the right to obtain economic benefits or service potential from use and the right to direct the use. The second definition is on the lease term. The lease term is the non-cancelable period for which a lessee has the right to use an underlying asset, together with both periods covered by an option to extend the lease if the lessee is reasonably certain to exercise that option, and periods covered by an option to terminate the lease if the lessee is reasonably certain not to exercise that option. Finally, a lease must have exchange of consideration. Let's have a look in more detail at lessee accounting requirements proposed by Exposure Draft 75. At the commencement of the lease, the lessee recognizes a right-of-use asset and a lease liability. The right-of-use asset is initially measured at the initial value of the lease liability. Subsequently, the right-of-use asset is measured at cost or at fair value. The lease liability is initially measured at the present value of the future lease payments by using the interest rate implicit in the lease, if that rate can be readily determined. If that rate cannot be readily determined, the lessee shall use the lessee's incremental borrowing rate. Subsequently, the lessee liability is measured at amortized cost. Exposure Draft 75 also proposes recognition exemptions for short-term leases and leases of low-value assets, for which the expense is recognized on a straight-line basis over the lease term or another systematic basis. Let's take a look in more detail what are the main accounting requirements in lessor accounting. As it's explained earlier, the IPSASB decided to propose to substantially carry forward the risks and rewards model that exists in IPSAS 13. However, Exposure Draft 75 proposes select changes compared to IPSAS 13. Regarding initial direct costs definition, Exposure Draft 75 proposes to define initial direct costs consistently with the definition of incremental costs of obtaining a binding arrangement in Exposure Draft 70, revenue with performance obligations. Therefore, the costs incurred by a lessor to obtain a lease are accounted for consistently with costs incurred in relation to other contracts with purchasers. Regarding lease modifications, Exposure Draft 75 proposes to account for a modification to a finance lease as a separate lease if the modification increases the scope of the lease by adding the right for the lessee to use one or more underlying assets, and the consideration received for the lease increases by an amount commensurate with the standalone price for the increase in scope. Exposure Draft 75 also proposes to account for a modification to an operating lease as a new lease from the effective date of the modification, considering any prepaid or accrued lease payments relating to the original lease as part of the lease payments for the new lease. IPSAS 13 does not include specific requirements relating to lease modifications. Regarding subleases, Exposure Draft 75 proposes to classify subleases by intermediate lessors by reference to the right of use assets, arising from the head lease and not by reference to the underlying asset, which differs from the current requirements in IPSAS 13. Regarding disclosures, Exposure Draft 75 proposes enhanced disclosures to better evaluate the amount, timing, and uncertainty of cash flows arising from a lessor's leasing activities, such as a table of income, information about residual asset risk, information about assets subject to operating leases, a maturity analysis, and changes in net investment in finance leases.
Thank you, Joao. Exposure Draft 75 also proposes new requirements to account for sale and leaseback transactions compared to IPSAS 13. Would you be able to explain these new requirements, Joao?
Thanks, Eileen. Exposure Draft 75 proposes to distinguish the accounting for sale and leaseback transactions by asking whether the transfer of the asset is a sale or not. If the transfer of the asset is a sale, then the seller lessee recognizes a right of use asset measured at a proportion of the previous carrying amount of the asset that relates to the right of the use and recognizes a lease liability measured according to the requirements proposed in Exposure Draft 75. On the other hand, the buyer lessor recognizes the underlying asset and measures it according to the applicable IPSAS and recognizes the lease according to the Exposure Draft 75. If the transfer of the asset is not a sale, then the seller lessee recognizes a financial liability and the buyer lessor recognizes a financial asset, both measured according to IPSAS 41.
Thank you, Joao. ED 75 represents Phase 1 of the Leases project and was issued in January 2021. We encourage you to respond to the ED by May 17, 2021, which is the deadline for comments. The IPSASB would greatly appreciate and benefit from different points of view as it progresses towards finalizing the standard. The IPSASB will consider a first review of responses received at its June 2021 meeting and will look to issue an IPSAS on leases once it has completed this process. Depending on the responses received, the IPSASB's target is to approve the IPSAS on leases in March 2022. Phase 2 of the Leases project will consider public sector issues specific to concessionary leases and other arrangements similar to leases. As part of Phase 2, the IPSASB has issued the Request for Information, RFI, concessionary leases and other arrangements similar to leases, along with this ED, with the same deadline of May 17, 2021. The next steps of the RFI will be determined once the IPSASB considers the responses to the RFI. Thank you for viewing this webcast. For further information, please visit our webpage at www.ipsasb.org. From myself and Joao, thank you and goodbye.